Hey everyone, welcome back to Corporate Decoder. Today's ST just filed an 8K, and I am seeing a key decision point for shareholders. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company held its annual meeting and shareholders voted on some important company direction matters. Let's dive in. So, State Street Corporation held its annual meeting on May 20th, 2026. Most shareholders, about 87% of them, were represented either in person or by proxy. This shows pretty strong engagement from the folks who own pieces of the company. The big items on the agenda included electing directors, voting on executive pay, approving their independent auditors, and a shareholder proposal about the board chair. First up, electing 13 people to the board of directors. Looking at the vote tallies, it is pretty clear the shareholders were happy with the nominees. For example, Marie Achandoha received over 222 million votes in favour, with only a small fraction voting against. This pattern holds for all 13 nominees, showing strong confidence in the current leadership team. Next was an advisory vote on executive compensation. Think of this as a say-on-pay proposal. Shareholders overwhelmingly approved this, with nearly 93% voting for it. This suggests that most investors feel the compensation packages for executives are aligned with the company's performance. Then came the ratification of Ernst & Young as their independent auditor for 2026. This is a standard but important vote to make sure the company's financial books are being checked by an outside firm. Almost 92% of the votes were in favour, indicating confidence in Ernst & Young's ability to do a thorough job. Now, this last one is interesting. It is a shareholder proposal asking for the board chair to be an independent member whenever the next CEO transition happens. This aims to separate the roles of CEO and board chair, which is often seen as a good governance practice. However, this proposal did not pass. A significant majority, about 77%, voted against it. This indicates that shareholders as a whole are not yet ready to mandate this change in governance structure. Finally, the filing includes the usual exhibits, including an interactive data file. So what does this all mean for State Street? The votes show that shareholders are largely supportive of the current board and executive compensation. The rejection of the independent chair proposal suggests that while good governance is discussed, there is a strong preference for the current structure or a cautious approach to mandating changes. The company is continuing its operations with the approval of its auditor and a leadership team that investors seem to trust. The fact that they are holding these votes shows they are committed to transparency and following the rules that govern public companies for investors. This filing provides a clear picture of shareholder sentiment on key governance and leadership issues. It is a confirmation that the board's direction is generally aligned with what most shareholders want right now. The research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button and subscribing really helps, and check out the Discord in the description.